Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to another exciting edition of our Forex Morning Mastery, your daily dose of financial insight and trading strategies. Happy new month to you all. And in fact, today it's a very important day, as it marks not only the beginning of a new month, but also the last trading day of the week. Now you should at this moment be considering the fact that today is going to be a crucial moment for market participants, as they will be swinged between rounding off their trading activity for this week and of course preparing for the new month. Firstly, to start off a new month often brings fresh market sentiment as market participants reassess their positions and adjust their strategies accordingly. Now, this can lead to increased volatility and of course welcome trading opportunity as well. So this makes it a very important day and of course important session to help us see how the market is looking like at the moment and use that information to strategically position ourselves for the new trading opportunities. And secondly, being the last trading day of the week, it is essential that market participants wrap up their week's activities, review their trades, and plan ahead of the upcoming week. So it's a chance for us to catch up with the vibe and also use whatever we can see on the chart to position ourselves for the next move. So I encourage us all to stay tuned in, as I do have a very interesting and simple trading setup that we will be using today to unravel the potential trajectory for price action for today. So so far this week we have been monitoring 3 assets which we have on our watch list, including the USOILSPOT, the GBP/USD, and of course my favorite, the XAUUSD, and we've done fairly well this week so far. And though yesterday we saw some couple of losses, especially on the USOILSPOT, but we were able to get some significant traction on the XAUUSD and the GBP/USD as well to balance out the losses on the USOILSPOT. So we are going to be taking a look at that and see how we can use the information, manage our position, and as well position ourselves for the next move. And usually it's important for us to also take into consideration the psychological expectation that comes with days like this, as market participants try to round off their trading activities for the week. We usually see the tendency of price action moving in the opposite direction of the prior leading price action, hereby resulting in the emergence of reversal setups on our chart. So we are going to be taking all of this into consideration while we review the current market structure. Now, for those of us who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. And I do know you will be wondering what this is all about. What is the Forex Morning Mastery session is all about? Well, the Forex Morning Mastery session is a follow-up daily activities on the videos I shared during the course of the weekend. So during the weekend, I have a couple of videos that I share which details what my expectations are looking like on a specified and chosen financial assets. Now, during the Forex Morning Mastery, as technical traders, of course, we usually gather here every day as a community and engage in follow-ups and review of these financial assets, looking at our current trading position in preparation of both the London and the New York session. So the session officially kickstarts about 8:05 a.m. UTC, 9:05 a.m. West African time, and I encourage us all to stay tuned in so that you don't miss out on the insights that we will be sharing today. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the market sentiment for the day. And of course, based on the asset we have been monitoring since the beginning of the week, we have focused on economic features from both the United States and the United Kingdom economic docket. So the week we were able to include some mid-tier economic features so that we can have a broader view into what market participants are looking forward to. So this week so far we had some bunch of market economic features that in fact influence the market participants' decisions, from the speeches from both the United Kingdom and the United States. We had a durable goods order, we had a housing price index, which all came in phenomenally well. We also had the gross domestic product annualized, one of the major key highlights for the week, to give us an insight into how well the US economy is doing. And of course, that came in below expectation, but there still shows some expansion in the United States economy, giving further emphasizing how resilient the economy is. Then we had some other couple of speeches from the Fed officials, and yesterday we saw the core personal consumption expenditure, which actually came in just as expected. Now, the core personal consumption expenditure is also considered to be an inflationary gauge, and of course, with the data that came in yesterday, it shows that inflation is still curtailed within the United States, hereby waking up the idea of a potential interest rate cut, which of course has affected the US dollar negatively across board. So we are going to be looking at how the market participant reacted to this event, and of course use that information to position ourselves for the next move. Then for today, Friday, March 1st, we are looking at a very high impactful event, which is coming in the form of the ISM manufacturing PMI. So this data here is coming in about 7 hours from now. So we do want to record the time so that we can be on standby to position ourselves for the next move. Now, for those of us who do not know what the ISM manufacturing PMI is, well, this is a leading economic indicator in the United States, which of course measures the health of the manufacturing sector by surveying purchasing managers on various business activities. Anticipation of this data can influence market sentiment as it provides insight into the economic expansion or contraction as well. And a PMI reading, usually we have a scale of 0 to 100 as a rating. Now, a PMI reading above 50 indicates expansion, potentially leading to positive price action in favor of the US dollar, while a reading below 50 may result in opposite effect as it suggests a contraction in the manufacturing sector. So we look forward to this very important event for today. Then besides this, there are other mid-tier economic features which we want to be putting on our radar too as well. One of them is the Michigan Consumer Sentiment Index, which is published by the University of Michigan, of course, and it's a survey gauging sentiment among consumers in the United States. Now, this data shows a picture of whether or not consumers are willing to spend money, and this, of course, is a driving factor of any economy. So if consumers are willing to spend money, then that means there is a trust in the economy, and of course it will potentially increase the value of that of the currency of that economy. So we look forward to a higher than expected figure to give the US dollar some push. So looking at the previous data here for the month of January, it came in at 79.6, as you will see right here. And we have economists projecting that for the month of February, it's going to come in just like what we had last month. So they are suspecting that there's not really going to be any change at all. So as usual, we will look forward to see what the actual data will be. Then later on today, we are going to be looking at the monetary policy report from the United States. Sorry, I had to attend to something here. So we are going to be looking at the monetary report from the United States too as well, and this is another important event which gives a comprehensive assessment provided by the Federal Reserve detailing the economic outlook and the rationale behind monetary policy decisions. In fact, its impact on market sentiment is also considered to be significant, as market participants will closely analyze this report for insight into the future interest rate move, inflation expectations, and the overall economic outlook. So we're also going to be looking forward to what that report is going to say, and in fact I think it's going to be helping market participants position themselves for the new month of March. So we look forward to that one too as well. Then we also have some handful of speeches from Fed officials. We have Walla, we have Bostic, we have Daly and Kugler, all of which everyone will be looking forward to understand the health situation of the US economy. So these are the events we are going to be looking forward to today, and of course we do know that the anticipation of this event alone has a way of influencing the character and sentiment of market participants, which obviously will reflect on the chart as price action. So what we are going to be doing today, as usual, is to sniff through the current market dynamics, looking out for patterns and structures that we will be using to strategically position ourselves for the next move. So as usual, the first asset we are going to be looking at today is going to be the USOILSPOT. Now on the USOILSPOT, we've had quite a phenomenal week on this asset. Remember that we have been buying this asset since the beginning of the week, especially after price action broke out of that $76.20 level. Now, for the sake of those who missed out on our earlier editions and for educational purposes as well, let's quickly run through what really happened at the beginning of the week that led to the decision that made us to buy this asset. So at the beginning of the week, we saw how price action was confined within our key level at the $76.50 level and the $75.87 area to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we have a range like this, we exercise patience, waiting for price action to either break out of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. Now, before I go further here, I want to emphasize that we did a top-down analysis on this asset on Monday, and if you in any way missed out on that session, you might want to look at that video to understand how we were able to identify the most important parameters which we used on this chart to guide our decisions for this week. The links are right in the description box below, so you can check them out after the live session. So coming back to where we were, so we saw a range here and we were looking out for either buying opportunities at the breakout of the resistance line or the breakdown of the support line for selling opportunities. Now, at the beginning of the week, we begin to notice how sellers were finding it difficult to settle below the $75.87 area. In fact, when we looked at the nature of the week of the candles, we saw that our price was rejecting that area sporadically, and in fact we saw the emergence of multiple hammer candles, which technically reveals the presence of buyers in any current market structure. And in fact, this candle happened 3 hours consecutively to give us a signal that buyers are getting stronger around this area. So this gave us a privilege to actually join the bullish momentum even before the breakout of the resistance line of that range happened. So we positioned ourselves at the $76.20 area, just a barrier around that area. Then we saw price breakout, retest that structure, and since that moment we have been buying this asset. We had multiple entries, the $76.50 level. We added more positions at the breakout of the $77 area, and more came in when we started adding more at the $77.32 level. So we were riding the bullish momentum all the way to the upside, and through the course of the week we were able to scoop in over 500, if not close to 600 pips on this particular asset. And for those who capitalized on this opportunity, well done and kudos to you. Now, as it is, during our live session yesterday, we decided to use the ascending trend line, which of course supported the bullish idea since the beginning of the week, to guide our trading decisions going forward. And after connecting the series of higher lows, we had a couple of ascending trend line to guide our decisions. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying, and the only condition that will make us sell is for this ascending trend line to be breached and broken to the downside. So with this understanding in mind, yesterday we decided that we will be buying, continuing the uptrend move if price action goes ahead to break out of the $78.50 level, and that since price has broken down the ascending trend line, we look out for selling opportunities below the $77.75 area. And of course, we had a sell position triggered yesterday. Unfortunately, that did not do very well as we saw price action spiral back to the upside, taking us out of that position in a loss. And the same thing also happened with the buy position, as we saw it got triggered at the $78.50 level, and of course that one too went into a loss. And it's quite clear that the market has been consolidating ever since then. So the last 24 hours has seen market condition be more indecisive, as you will see price action has been confined within that range at the $78.50 level and the $77.75 area to emphasize the prevailing uncertainty in the market at that particular point in time. Now, with the situation we have here, how do we intend to position ourselves for the next move? Well, it's important that we also take into consideration the various factors behind the scenes which has been keeping the momentum in this market afloat. Now, like I said, since the beginning of the week, it has been more of buying this asset, which we saw an ascending trend line to support it. And it makes a lot of sense that we continue to keep the bullish idea alive But one thing you will notice is that in the last couple of days, price action had finally broken down the ascending trend lines here to incite the possibility of selling this particular asset. Now, another thing that is affecting this is the anticipated easing of inflation in the United States, which is expected to prompt the Federal Reserve to initiate rate cuts as early as the month of this month. It could be this month, it could be in the month of May, it could be in the month of June, due to the report we got yesterday from the core PCE. Now, such a move is likely to stimulate fuel demand in the world's largest oil consumer and bolstering the outlook for crude oil prices. So, if the potential for interest rate cuts becomes high, then the value of the US dollar is going to be cheap enough. And you all know how the US oil is a US denominated asset. So, it makes the US oil available for market participants to buy, and when this is available, the demand will rise, and when demand rises, there will be scarcity at some point, leading to price rising, and this may likely favor the buyers. So additionally, we should also take into consideration the slight downtake of the US dollar at this moment, which obviously will favor this asset too as well. So considering all of these factors, the idea of buying is looking very visible at this point. So buying this asset makes quite a lot of sense. But if we look at the technical nature of what is going on this chart right now, you will see that since price action found a high at the $79.25 level on Wednesday, it has been unable to break out of this previous high. Instead, we have seen series of lower highs in that regard, hereby inciting that sellers are getting stronger. Now, if we now consider today being the last trading day of the week, which obviously comes with market participants rounding off their trading activities ahead of the weekend, this may result in profit-taking activities, which would reflect on the chart as a retracement of that bullish momentum we have been enjoying since the beginning of the week to incite a bearish move to the downside. So the $77.75 area that we identified yesterday as a selling niche for us still remains very intact to look out for selling opportunity. Now there are two ways to which we can capitalize on this opportunity here, which I've always emphasized in my previous sessions. One of it is for those of us who have been profitable on this asset, that is for those who have been part of this profitable journey since the beginning of the week, you can afford to leverage on some of the profit you had made to place a sell stop order below that structure to join that momentum. And if it doesn't work out for us, we know that we are only risking some of the profit we have made. So it doesn't make us lose or affect our real portfolio funds. However, if you are new with us and this is your first position with us, you may likely want to wait for price action to give us confirmation before jumping, and that will reflect on the chart as a breakdown. Then we look out for retest on the 15 minutes time frame to join the decline to the downside. Then we could add more sell positions if price goes ahead to break down the $77 area, the $76.50 level, and of course the $75.87 area, all of which I already have a sell stop order to maximize the bearish move to the downside. So that is how we are going to be managing a bearish bias on this asset today. However, if the buy pressure around this area persists in such a way that it leads to the breakout of the $78.50 level, then I will now be considering buying, as price action is back right into the buyer's territory, which is just right above this ascending trend line we identified here, making it more comfortable for us to join a bullish bias. And in that regard, I also have a buy stop order above that $78.50 level to maximize that bullish momentum. And if price goes ahead to break out of the $79.25 level, the highest point for this week, this will definitely welcome more buy positions on this asset. So it's a simple trading setup we have here on the USOILSPOT, where our center of focus is basically going to be between the $78.50 level and the $77.75 area, where depending on the direction of the breakout will give us an idea into where price is likely closing for this week. So with that being said, I would encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So this is my simple view on the USOILSPOT for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, and please do not forget to give the video a like. Your likes are valuable to me and also helps the channel to grow, and it also makes the YouTube algorithm push the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the next asset on our watch list. Stay tuned in. So the next asset on our watch list for today is the GBP USD, and what a choppy market condition we have on this asset since the beginning of the week. And amidst this market fluctuation in the last 48 hours, I think 96 hours, the pound sterling has been navigating a downward trend, as you will see at this point, breaking down our key level a couple of times in the last 48 hours, as you will see right here. And if you remember, since in the last couple of days during our live session, we did identify this area between the 1.267 and the 1.265 area as a selling window, and we said here that continued selling pressure around this area will further buttress the fact that we need to be selling this particular asset. And of course, we have been capitalizing on this opportunity since Wednesday's trading session. Now let me run through how we began the bearish momentum here. So on Tuesday, we had this ascending trend line marked out as we saw price found higher lows within that range between the 1.269 and the 1.26565 level. Now, you know how we use our trend lines in this community. If the trend line gets breached and broken to the downside, we will be selling the asset. And to join the bearish momentum, we had this level at the 1.26830 level identified, and since that moment we saw price broke down the structure, and we have been selling since Tuesday stroke Wednesday's trading session. Though we had some buy pressure resume here on Wednesday, but we assumed that this buy pressure here may be a retracement of that impulsive bearish leg we saw that started on Tuesday. And what we were actually looking out for during our Wednesday and Thursday trading session was the culmination of that retracement phase. So the question we were asking is, how far will this bullish momentum go before the second leg of the bearish momentum will begin? So as a result of this, and with this understanding in mind, we identified this area and said we shall be looking out for selling opportunities within this area if we notice selling pressure. And of course, you will see that the last 48 hours selling pressure have been around that area. And of course, we said we will be selling at the breakdown of the 1.26565, which happens to be the support line of that range we identified at the beginning of the week. And we kept on adding more positions at the breakdown of the 1.265, and I did mention yesterday that we should be adding more position at the breakdown of the 1.26220 level, which happens to be the lowest point during our analysis from yesterday's Forex Morning Mastery session. Now, at this point in time, if you had moved your stop losses accordingly, you must have been taken out of all the sell positions at this juncture in the market. Though the third position did not do very well at all, as that went into a loss, but the other two was able to serve as a buffer for the loss we had on that third position. So though we've not really seen anything significant on the GBP USD so far this week, but today being the first trading day of the month and the last trading day of the week, well, let's see if some volatility could come in this market to push price in a particular direction. And there have been various factors behind the scenes, like the sentiments prevailing ahead of significant events such as the release of the US ISM manufacturing PMI data, and of course the Fed monetary policy report, which is coming up later today. And there's one thing we also want to take into consideration, and that is the US personal consumption expenditure price index, which was released yesterday and recorded the lowest annual inflation rate in 3 years, hereby reinforcing market participants to start considering a potential rate cut by the Federal Reserve. And this may likely favor the pound sterling, and as you will see, since the later part of the New York session yesterday, that was especially after the PCE data came in, we have been noticing some marginal gains in favor of the pound sterling right around this area. As you will see, after price got into the structure, we have seen some series of higher lows, which is building up some potential uptrend scenario, maybe in favor of this this PCE that we saw. Now, we should also remember that the pound sterling may also find support from the hawkish remarks from the Bank of England policymakers, who have always reiterated the fact that the Bank of England is not ready to cut interest rates anytime soon. And as a result of this could be an attractive window for investors to place their capital on a pound sterling, especially when there's a high tendency to take on risk at this particular point in time. So with this whole scenario in play, how do we intend to position ourselves for the next move? Well, looking at the structure here, remember we did say here yesterday that the only condition that will make us buy the GBP USD was for this descending trend line to be breached and broken to the upside. Now, for those of you who are not part of our earlier session, let me quickly show you how important that descending trend line is. And for us to see the importance, we need to scale up into I think it's the 4 hours time frame, I guess. Okay, so it's the 4 hours time frame. Now, if you look at the 4 hours time frame, you will see how price action has been respecting this descending trend line. In fact, we had a series of lower highs since the beginning of this year. Price action has respected it, and as a result we decided that we are only going to be buying if price breaks out of that descending trend line, which is yet to happen. So the idea of selling is still on the table at this point. Now, in addition to that, on the 4 hours time frame, is this ascending trend line we identified after capturing the character of price action in the last 2 weeks. Now, we connected the series of higher lows, giving us the support line of the ascending channel, and then we connected the series of higher highs, giving us the resistant line of that ascending channel. Now, this week we saw price break down the ascending channel, break down the support line. Then we saw the retest of structure, continue selling pressure, supporting a bearish momentum to the downside. So price is trading below the support line of that ascending channel, and of course the descending trend line that has been supporting the bearish momentum since the beginning of this year. So everything is looking very bearish at this point in time. So we are caught in a limbo where we have fundamentals favoring the GBP, the pound sterling at this point in time. So the question now is, how do we position ourselves for the next move? Now, scaling back down into the 1 hour time frame, we will continue to look out for more selling opportunities, have the breakdown of the 1.26220 level to support the technical expectations on this chart, and we will definitely be adding more sell position if price action can break down the lowest point for this week at the 1.26130. So you want to be marking out this level too as well. So we have the 1.26130, right, 130 level, where we will be adding more sell positions to our existing trade. So let's have a sell stop order around that area to maximize the potential of the bearish move. However, if the opposite happens, that is, markets will lean in towards the hawkish remark from the Bank of England policymakers, we may likely be seeing a reversal setup here. And in fact, if you look at what has happened after price tested this area, you will see that price has been finding higher lows, giving us something that looks like a potential reversal pattern. And usually whenever we identify such patterns, the next thing we want to be doing is to mark out the neckline, which we will be using to position ourselves for the breakout retest of that neckline. So we have something at the 1.26350 area, which could welcome the first buy position for us for this week. So let's see if price will break out and retest the structure. So let me just give this a green color to, okay. So I will be looking forward to a breakout retest. Now I want to see a retest of structure. Remember, this outlook is very bearish. So for us to join a bullish momentum, we need to see an outright confirmation that truly buyers have come to stay, and that will look like a breakout retest of the neckline at the 1.26350. Then we can join that bullish momentum, and in fact we have multiple levels that we can use to maximize the potential of this bullish move. So we have the 1.265, we have the 1.267. please, I'm not using this one due to the fact that it's below the selling niche here, so I don't want to use the 1.26565. So instead I will jump into the 1.267, 1.2683, and if price continues to find new highs, then the breakout of the 1.27. all of this level for me have a buy stop order intact, just in case of any volatility comes in. I will be right on spot to join these moves. So this is my simple view on this asset for today. So let's mark out these levels on our chart, as we will be needing them as a reference point to guide our decision. So let's see how the market will react to this range between the 1.26350 level and the 1.26220 area to capitalize on the next move for today. And for those who still have a sell position, please move your stop losses accordingly and secure the sell positions while we wait to see how the market will be reacting to the structure. So with that being said, okay, so if you have any questions whatsoever, or you need some further clarifications, please feel free to let me know in the comment section. So I will be taking the next 5 to 10 seconds off to see if there are any questions before we move on to the next asset on our watch list. So I can see you, Irene, up here. Good morning to you. I'm glad to have you around. So you said here that oil, okay. Please, your price seems different from my broker as of when you're demonstrating your price was 77.73. My broker was 78.30. Okay, so is that a question? That's a statement to me. It appears like a statement to me, but I want to assume you're trying to ask me why is that so, right? And I can see Torres Master also saying that I have noticed that several brokers have different charts, but I think the only correct chart is the one from TradingView. Or what is your take? Okay. This is a very sensitive question, and there are various reasons why this could happen, most especially on assets like the USOILSPOT, like commodity asset, most especially those. This is not peculiar with currency assets, so it's always very you always see such situation happen with commodity assets. And well, there are various reasons why this happens. One of them is market liquidity. Most brokers may have access to different liquidity providers, resulting in variation in prices based on the depth of liquidity available to them. That is one scenario there. And then the other scenario that could happen is spread and commission. So every brokers have different spread margin, and this spread margin is where they make their profit from. At least if you want to take a position at a price level, they quote another price for you. So that differential is what they actually use to make their own profit. So these are a couple of reasons amongst many other reasons that could be affecting this discrepancy. This could be causing this discrepancy you see on your chart. Now, it doesn't make any difference for us technical traders. What we simply want to do is to mark out the levels accordingly. So let me say, for instance, let me use the GBP USD on my chart right now, for instance. Okay, let's go back to the USOILSPOT. For me usually takes some time to load, so I will just use the GBP USD as an example for you. Now let's say that we have a level at the 1.26350 level, as I'm showing you with my illustration right now, and your own broker has a level at say 1.264. Now if you look at this chart, what you want to see is what is the structure on your broker's chart looking like. Now for my own right here, we have something like this, looking like a potential double bottom structure where the neckline for me is sitting at the 1.26350 area. Now you want to look at that on your chart too as well. Do you have the same formation? If you do have, where is the neckline of that formation happening on your own chart? So if it's still around 1.26350 level, then you have your buy stop order around that area. But if it still falls around the 1.264 like that on your own chart, then that is where you want to be having your buy stop order. So it's basically we are trading basically around structures and not price levels. All right, so the price you see on a particular asset does not necessarily mean that that is the value of the asset. It's just a wave of emotions of market participants that are determining the prices of this asset. It's not really the price. Let me tell you, that's a fact. It's not the price. It's just the emotions that is driving this price movement. So what we are doing as technical traders is to use structures and patterns to guide our decisions. So I would encourage you to revisit that your chart again and see if the structures I have on my charts remains the same with it. Then you mark it accordingly to fit into what your broker is presenting to you. So I hope I made myself clear. It looks a little bit complicated, but I just hope I made myself very clear. Please let me know in the comment section. Irene Happier. All right. I see your comment, Princess Abulokwe. Good morning to you, Princess. Glad to have you around with us today. I didn't see you throughout the course of the week. Hope you are doing very well, and happy new month to you. Okay, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the final and last asset on our watch list for today. So the last asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. On the gold spot, we've had quite an interesting experience so far this week. Remember, the market was in a very strong consolidation phase, where we saw initially at the beginning of the week price was confined within the $2,035 and $2,030 area. It was just a $5 range before it expanded into a $15 range between the $2,040 and the $2,025 area, and within this range we were able to take some short-term trading opportunities, which did not do very well at all. Most of the time they were getting closed at break even or a small size of profit, let's say 100 pips, 80 pips, thereabout. And remember, in the last since the second half of the week began, we were using this descending trend line as a yardstick to guide our trading decisions. And of course, you know how we use our descending trend line. As long as price remains below the descending trend line, we obviously want to be looking out for patterns and structures that support the idea of selling. And the only condition that will make us buy is for the price to break out of that descending trend line. And this was exactly what happened during our Wednesday's New York session, as we positioned ourselves just right above the $2,030 area to capitalize on that uptrend. And then we had multiple entries. We had positions at the 2033. We also had at the 2035. And for those of you who were part of our XAUUSD live window on Wednesday, I did emphasize that we should be moving our stop losses to secure all positions, as selling pressure could happen anytime. Now, during our live session yesterday, we begin to notice that that area between the 2040 and the $2,036 area had been a strong selling niche since last week Friday. And in fact, despite the buying opportunity we took on Wednesday, we saw the limiting factor around that area. And to guide our trading decisions yesterday, we decided to mark out this ascending trend line after connecting the series of higher lows, giving us something to work with. And one of the things we agreed here yesterday is that if this ascending trend line gets broken to the downside, we will be in for selling opportunities. And to capitalize on that bearish move, we had structures like the 2035, which triggered the first sell position for yesterday. We had a $2033.50 level, and of course the $2030 area, and all of which in total we had about price move about 56 pips on the first sell position, moved about 50 pips on the second one, and the third one moved about 20 pips before the bullish momentum came in. And for those of you who were part of my XAUUSD live window yesterday, I did emphasize that all sell positions must be protected at that point in time. I did updated us also on my TradingView and Telegram platform as the US core PCE was drawing near, and this could lead to volatility, like I said in my comment. And we saw what happened there. And remember that we had buy stop orders at the 2035, which of course got triggered after price the market reacted negatively to the reports, as we saw here, and we saw two buy position triggered, one at the 2035 and the other at the 2040, as we saw the first move over 150 pips, while the second one moved over close to 100 pips on that one. And this morning I did emphasize that we should all move our stop losses accordingly and protect the current buy positions as we begin to notice selling pressure resume around the $2050 level. And in fact, if you had moved your stop losses accordingly, you must have been taken out from that buy position with a reasonable amount of profit. Now the bullish momentum we saw yesterday was as a result of the weakening of the US dollar, which we have been noticing this in the last couple of days, and coupled with a decline in the US Treasury bond yield, it offered some renewed optimism for the buyers of gold, especially after the US PCE report came in just as expected, and also inciting the idea that there will be a possible rate cut maybe this month or May or June. So it was quite a phenomenal day for us yesterday as we did capitalize on that move. And during my commentary this morning, I did extended this ascending trend line to capture the recent trading activity, as you will see here. And you know how we use our ascending trend line. Of course, we want to see price stay above the ascending trend line to maintain a bullish bias, and in that regard I said we will be positioning ourselves above the 2050 to join the uptrend continuation. So with a buy stop order above that structure, we were ready to capitalize on that move. And if you read my commentary this morning, I said that it is very, very important to safeguard all the buy position at that point, and that we should keep the possibility of selling positions open, aligning with the current structure I identified. So I marked out the 2045 level, which interestingly shares a confluence with the ascending trend line, and that if price breaks down the ascending trend line, we will be in for selling opportunities. And if you had your sell stop order below that structure, you must have had a sell position triggered at this point. And for those who capitalize on that, well done to you. Let's see how far this momentum will go. However, if in any way you have missed out on that sell position, let's see if the market will come back and retest the structure to give us more opportunities to join the bearish move. And we all know technically when price breaks down a trend line or structure like this, we expect that price may come back, retest the 2045 or even the ascending trend line, where continued selling pressure will be all we need to join a bearish move to the downside. And if price continues to drop, we have the 2040, we have the 2035 level. I don't know why I can pick that. Okay, 2035 level to maximize the bearish move. We also have the 2030. So I would like us to mark out all these levels, as they will be playing a major role in capitalizing on that bearish move. So sell stop orders below the structure will be will make us position ourselves for this move. So this is the only condition we are looking at to sell. So let's see if the market will come back and retest the structure or the ascending trend line. So anywhere between the 2045 and the 2048 area still remains a selling niche for us to join that decline to the downside. So I encourage us all to mark out these levels, as we will be needing them as a reference point to guide our trading decisions for today. And if we are going to be buying this asset, the only condition that will make me buy this asset is for price to climb back above the ascending trend line, which of course we are positioning ourselves above the $2,050 area to capitalize on that uptrend move. So that's the only condition I will be looking out for to buy this particular asset. Then there's one more thing I would like to also emphasize here, which may make things a little bit complicated, but I'm not sure if I should. Let me just place it right there. Let us see. Now, if I project this ascending trend line into this area to capture the low for yesterday, we can see we have a structure that could potentially incite the uptrend continuation. Now, if we are going to be buying below the 2050, definitely we want to see a significant pattern that supports a bullish idea. And what do I mean by significant pattern? Well, for us to see a significant pattern, we want to see something like a double bottom structure, a strong reversal pattern. It could be a double bottom structure, inverse head and shoulder pattern, falling wedge, whichever case that happens around this area. Once we identify this reversal pattern, we mark out the neckline of that reversal pattern, and then we join the breakout retest of that neckline. But at this point in time, nothing of such is visible here, so we still maintain a bearish bias. But if at any point in time we notice a reversal pattern, we obviously going to be getting ready to jump into that position, making us capitalize on the uptrend continuation even before the breakout of the $2,050 level happens. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. And for those of you who are going to be part of the XAUUSD live window, well, you will be privileged to see in real time my updates on this particular asset. So I already dropped the link to the XAUUSD live window right in the comment section of this in the comment section. It is pinned at the top, so you can go ahead and click on that link, click on the notify me button, so you can get notified as soon as we come on live. So it usually kickstarts about 5 to 10 minutes into the New York session, and it lasts about 5 to 7 hours depending on the volume of trading activities for that day. So that is that for us today on the XAUUSD. I hope I made myself clear, and if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we round off for today's Forex Morning Mastery session. And I'm yet to see your likes, guys. We have over 8 people on board, and my likes here are still below 4. Let's make the like tally with the number of participants in the session, and thank you very much as you do so. It doesn't cost you anything. Please click on that like button and support this channel to grow. I see your comment here. Irene Happier says, what's your link for TradingView page, please? Okay, if you look at the bottom of your screen, you will see some wording scrolling there, so you can click on you can check out my user ID for my TradingView platform and of course my Telegram platform. And if you can see clearly, then probably check into my description box below. All these details are duly highlighted there. All right, I hope I answered you, Irene. Rex Vagara, good morning to you, Rex. Happy new month to you. Glad to have you around with us this morning. So thank you very much, guys, for your likes. I really appreciate them, and for those who are yet to like, please do so. It means a lot to me, and it also helps the YouTube algorithm push this content to a wider audience of traders who may find this beneficial to them too, eventually helping this community to grow. Thank you very much as you do so. So it's on this note we have come to the end of today's Forex Morning Mastery session. It has been a wonderful week for us all. We did fairly well this week, though it's not as phenomenal as we expected due to the choppy market conditions, due to the important US macroeconomic data we were looking for. Major market participant was stepping aside from the market, waiting for catalysts that will make them jump into positions. But thank goodness the week is over and we were able to make some profits this week. I have a very strong feeling that next week promises to be an exciting one, as we will be able to lock in some significant amount of profits as market participants anticipate the first NFP for next month, for this month, sorry, and a lot of and during the course of the weekend, market participants will be digesting the information gathered so far this week and coming into the new week with new and fresh opinions. And as always, I will be dropping my ideas for next week on this platform. If you are yet to subscribe to this platform, I encourage you to do so that you don't miss out on my weekend videos that I will be sharing ahead of next week. So far we have been able to take on the USOILSPOT, the GBP USD, and of course the XAUUSD, where we identify simple trading setup that we will be using to guide our trading decisions for today. And I do hope you marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So all we just need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, let's ensure that we put this in place. A well-defined risk management strategy in place to mitigate against any risk on our portfolio. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions independently. So I look forward to seeing more of you same time on Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here to revisit this asset and prepare ourselves for the new month. So I wish us all the best of luck today. Happy new month, everyone. I also wish you a wonderful weekend. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.